Salam everybody, this is Investor Sheikh back at it again with another video. And today's halal stock pick of the week is Starbucks Corp, ticker symbol SBUX. Stock price is at $89.07. Now in prior years, Starbucks was Sharia non-compliant, but based on the 10K from last year, the analysts over at Zoya deemed this stock to be Sharia compliant. And the key stats are it has a $101.76 billion market cap, an annual dividend of $1.94 per share, a 52-week low of $68, and a high of 117.53. PE ratio is in the middle at 24.42, and the earnings per share is $3.57. Now, in case you don't know what Starbucks is a well-known coffee company that produces not just coffee drinks, but also cold drinks as well. If you live in the States, you'll notice that during rush hour, you'll see long lines at Starbucks and even long lines in the drive-thrus, because people love coffee. They want to get their morning fix for coffee, and Starbucks is one of those places that a lot of consumers will go to get coffee and perhaps breakfast and other pastries that they offer. Now, Starbucks Corporation, together with the subsidiaries, operates as a roaster, marketer, and retailer of specialty coffee worldwide. The company operates through three segments: North America, International, and Channel Development. Its stores offer coffee and tea beverages, roasted whole beans and ground coffees, single-serve products, and ready-to-drink beverages, and various food products such as pastries, breakfast sandwiches, and lunch items. The company also licenses its trademarks through licensed stores and grocery and food service accounts. The company offers its products under the Starbucks, Teavana, Seattle's Best Coffee, Evolution Fresh, Ethos, Starbucks Reserve, and Princey brands. As of October 3rd, 2021, it operated 16,826 company-operated and licensed stores in North America and 17,000 company-operated and licensed stores internationally. The company was founded in 1971 and is based in Seattle, Washington. So this shows that this company has a wide exposure of its products, not only at its stores in the US and worldwide, but also they sell Starbucks beans, ground beans, and other Starbucks products in grocery stores and other retail stores. So the Starbucks brand has expanded everywhere, whether you can get it online, at a big box superstore like Target or Walmart, or even at your local Starbucks. You can get so many Starbucks branded items there, and they have grown to become a well-known brand amongst coffee drinkers and has formed a culture in both the millennial and Gen Z culture, which I think will stand true for the next 10 to 20 years, because I don't think this company will go out of business. Now, looking at the growth of the stock, the growth is pretty decent. Over the past 5 years, the company has grown over 66%. But in the past year, it hasn't done so well, as the stock has fell over 25% from its high. Because in October 2021, we've seen the stock as high as $119. And since then, we've seen it decline as low as $68. And this is due in fact of the bear market that we're experiencing right now, as it also is affecting a lot of these well-established companies such as Starbucks. But there's also some issues in the Starbucks company that's affecting its growth, such as the unionization efforts in various stores, as well as issues with business over in China, because Starbucks tried to expand their businesses in China, but so many of the stores failed to succeed because the demand for coffee isn't as high in China as it is in the States. And that's one issue that Starbucks is experiencing. well, over the past 6 months, then the stock has started to recover from its low, as we've seen it reach the 90s, and right now it's in the high 80s right now. So it's possible that we could see the stock continue to rally, but that's no guarantee because we're still in the bear market and we don't know how long it may take for us to recover. And looking at the financials, looking at the earnings, the company has been doing pretty decent. We're not seeing any growth patterns, but the company is reporting positive revenue and positive earnings, with 2021 having a larger increase compared to the previous years. So that's a good sign. And with the quarterly, for some reason Yahoo's not showing the Q2, but Starbucks' revenue has been pretty steady throughout this year. And the earnings slightly decreased from Q4 2021. We're still seeing positive revenue and positive earnings, which is still a good sign. It's just that we're not seeing a growing pattern. But as you know, Starbucks is a well-established brand, and frankly, I would consider this to be a blue chip company, despite the issues that they're experiencing right now. All right. And in the financials, company is reporting positive net income at 4 billion, which is really good. And on the balance sheet, they have over 31 billion in assets. However, they have 36 billion in liabilities. So that's a red flag right there. The fact that the liabilities outnumber the assets is not a good sign short term. As we've seen in previous years, the assets are less than the liabilities. So in 2018, this was the last year that we've seen the assets outnumber the liabilities. 24 billion in assets, 22 billion in liabilities. But in the years after, we've noticed that the liabilities started to increase greatly. And then one thing to keep in mind is they also have 13 billion in long-term debt, but only 998 million in short-term debt. So that's one thing to keep in mind. So there's some red flags when you look at the financials. And when you combine that with the short-term issues, this could explain why the stock has not been doing so well this year. But hopefully the company will recover from this and perhaps return to that $100 level. If not later this year, then perhaps next year. However, this is not financial advice. Now, all in all, I believe Starbucks is a pretty solid company if you are a dividend investor and someone that's looking to invest in more well-established companies. So this could be a good stock to add to your watch list. Now, as always, I'm not a financial advisor, so please don't buy this stock simply because I'm talking about it. This video is for entertainment and educational purposes only. This is Investor Sheikh, checking out.